So my name is Jason Derbyshire, and again, today our theme is watching wash sales in December. And so before we get started, just a little information to remind you that the information we're presenting today is not tax or legal advice. You're responsible for your individual decisions, and not all information is appropriate for all traders or investors. So just keep that in mind with the information we present today. I'm the Education Director here at TradeLog Software. TradeLog's been producing IRS-ready tax reporting for active traders since 1999. Later I'll show you more about some of the resources related to wash sales as well as trader taxes that can be found at our website at TradeLogSoftware.com. Today we're talking about watching wash sales in December. Hopefully a lot of you were able to join us on our webinar a few weeks ago, or you may have watched the video recording. We did a webinar, Wash Sales 101. We talked about some of the essentials about wash sales. Today, we're going to focus on why December is an important month for monitoring wash sales, why you want to watch wash sales in December, and how to monitor and understand wash sales in the month of December. Particularly, I'm going to be showing you how to use the reporting in TradeLog software, and I'm going to explain some of these specific reports so that you can better understand how to use TradeLog to help watch wash sales in December. So let's get started. We'll talk first about why we watch wash sales in December. Now, if you're not familiar with what a wash sale is or some of the basics of the wash sale rule, then you'll definitely want to check out our webinar that's in our archive online. I'll show you how to get to those archived webinars later. We're not going to go into a lot of the details about what are wash sales, but what we want to talk about today is wash sales and how they affect you throughout the year. So for most active traders, wash sales are inevitable. The only exception is if you have elected Section 475, which is mark-to-market accounting for your securities. If you've elected Section 475, well, then you're exempt from the wash sale rule. Also, if you trade Section 1256 contracts, which include some broad-based index options, ETF options, futures, those are automatically treated with mark-to-market, so wash sales don't apply to those. But for most traders and investors who are trading stocks and options, wash sales are inevitable. They're going to happen throughout the year. One of the things we discussed in our webinar a few weeks ago about wash sale basics is that wash sale deferrals can accumulate over the course of the year. And you see the little example that I have on the screen. We talk about here, we show a simple example. Back in September, we had 100 shares sold at a loss of $100. We purchased another 100 shares within the 30-day wash sale window. That triggers a wash sale. We sold those. We actually had a little bit of a profit, but because of the wash sale that was attached, we had a loss of $75. Then we have another wash sale because within 30 days we buy more shares. So the end result that I'll highlight here with my highlighter is that we have $175 in wash sale losses that are attached to 100 shares that are currently open. These were purchased October 21st. So the wash sales have accumulated over the course of just a few trades. We have $175. That loss amount is attached to this open position. And so until this position is closed, I'll not be able to take that $175 loss. So we talk about the month of December. This is the last month of the tax year. So if there are positions that are open at year end that have large losses attached to them, then this is the only time you have to really close those and capture those losses. But with that in mind, it's important to know when wash sales really affect you, how they can hurt you. Because as we mentioned, wash sales are pretty much inevitable for most traders. And so it's important that you understand that not all wash sales are bad. I've heard some guys that will tell people, maybe some advisors, some tax accountants that'll say, well, close out everything in November and at the end of November and don't do any trading through December. And that is one way to avoid all wash sales, but you certainly don't want to give up profitable trading just because you're afraid of wash sales. Sometimes wash sales can actually be good. Sometimes they have no real effect. And notice I have two examples we can look at. Example A, say that you had an actual loss, net loss of $13,000 for the tax year. So you may have $10,000 in wash sale deferrals at the end of the year. That means there's $10,000 in losses that you cannot claim in the current tax year because of the wash sale rule. So those get moved forward to a future time whenever you close those positions. So we have to add that in to the actual loss. So now that takes us from $13,000 to a taxable loss of $3,000 because we're adding $10,000 in. So in this case, in example A, you still have a loss of $3,000. And as we know with capital gains or capital losses, you can only claim $3,000 a year anyways. So at this point, you have a max for the taxable loss of $3,000. Those wash sale deferrals aren't going to hurt you. They're just going to push losses into the next year, and that might be good. It might help you offset some gains that you'll have in the next year. So in a case like that, it's not necessary to close out positions in order to capture those losses because you already have a taxable loss. Look at example B on this screen. Here we have an actual gain of $10,000. So say that your net gain for the year is $10,000, but you have $5,000 in wash sale deferrals. So that's going to affect you. That would take your gain of $10,000 and put it to a gain of $15,000. However, let's say that you have capital loss carryover. Maybe last year you had $23,000 in losses. You could only claim a total loss of $3,000. So the capital loss carryover is carrying at $20,000. So in that case, it doesn't matter if you have those wash sale deferrals because you're still going to have those losses you can take from the previous year. Now I see a couple of questions that have popped up about being a trader, being MTM. If you have trader status with the IRS or you use mark-to-market accounting, then wash sales don't apply to you. So you probably don't even have to be watching this webinar. That's kind of a basic principle. If you have mark-to-market accounting, you elected Section 475, wash sales are not an issue. So check out our website under mark-to-market accounting and you can learn more about the issues that affect you. So that answers some of the questions that we've had pop up about that. So we're talking about capital gains and losses here, which affects the majority of people who are trading and investing. So in these two cases that we're looking at, you can see that the wash sales don't really hurt you. You still have a taxable loss, and so you're not having to worry about anything. But notice the next screen, we talk about when wash sales do hurt you. Wash sales hurt if deferred losses increase your taxable gain. And so notice here two examples. First of all, example A, actual loss of $13,000. So say that you had a net loss of $13,000 for the tax year, but you have $25,000 in wash sale deferrals. So in other words, $25,000 of your losses cannot be taken because they're attached to positions that are currently open. So in this case, we add that $25,000 and that puts us at a taxable gain of $12,000. So in other words, the IRS is going to tax you on $12,000 of either short-term or long-term capital gains, depending on the holding period, even though you actually lost $13,000. So that's definitely a bad scenario that you don't want. That's what I call being upside down. You lost money, but you're having to pay taxes on what looks like a gain in the books. So this is a situation where you definitely want to be concerned about that $25,000. What's causing that? is there a way to capture some of those losses in the current tax year? Example B is another situation where, let's say you did good this year, you have an actual gain of $10,000, but because you have some wash sales, you are deferring $5,000 of losses. So maybe you had a certain security that you were trading that was hitting you really hard. You had a lot of losses in that particular stock, and you ended up having $5,000 in deferrals because you still have shares open. Well, what's going to happen when it comes to your tax reporting is you're going to have a taxable gain of $15,000 because $5,000 of your losses you couldn't claim in this tax year because those positions are still open. So here we're talking about losses attached to open positions. So in that case, again, you have a higher tax accountability even though you really only made $10,000. So these are just two basic examples to kind of help you understand this is when wash sales can hurt you, when it's causing your taxable gain to be more than it actually should be or it actually was. So in these situations, you need to be concerned about wash sales. So this is why in the month of December we start really watching wash sales, because you need to understand what's going on in your account and then be able to make decisions based on that information. Now, an important reminder that we want to highlight, this is something we discussed as well in our Wash Sale 101 webinar. When it comes to reporting wash sales, a big misconception is that everything's on the 1099-B. So we want to remind you that brokers do not have to report all wash sale adjustments on the 1099-B. So the broker 1099-B only has to account for wash sales in identical CUSIPs and in the same account. But the IRS says that taxpayers are responsible for additional wash sales. This might include wash sales between stocks and options, wash sales across multiple brokerage accounts, as well as IRA wash sales. We're not going to touch on that too much today because we have a webinar coming up in a few weeks. It's going to talk about IRA wash sales. But if you have an IRA account and you're trading the same securities, there's wash sales that might come into play there as well. So this is a reminder because when you're looking at wash sales, your broker may not show. Some of the brokers have some nice tools in their accounts for looking at realized gains and losses. They may not show any wash sales affecting you, but you may have additional wash sales if you have some of these other factors. So that's why what we're going to do is show you how to look at using TradeLog to watch your wash sales. So how do we watch wash sales in the month of December? Well, 4 key things we're going to highlight today. Number 1, know where you stand with your taxable gains and losses. So here we are, we're on December 2nd. It's a good time to understand how you stand year to date on taxable gains and losses, which can sometimes be different than your actual gains and losses. It's also important, the second point, to understand how wash sales are currently affecting you. So you want to see what wash sales are affecting you right now, and then that way, point number 3, you can close positions if necessary to capture losses. Again, we don't advocate just closing out of everything and stop trading for 30 days. Because that may not be necessary. We want you to focus on being a profitable trader. However, there might be some situations that you may have where it's in your benefit to close out some positions to capture some of those losses that are being deferred because of the wash sale rule. Point number 4, we also need to make sure and avoid new wash sales if the result could be harmful. So we're going to talk about all 4 of these steps, and we're going to show you how to use TradeLog reporting to help you with these objectives. So let's look at the first point here, using TradeLog to determine your taxable gains and losses. So some key points with this, and then I'm going to switch over to a TradeLog demonstration and actually show you some things in the software. So first of all, if you want an accurate gain and loss report in TradeLog, you need to make sure you're tracking all of your accounts. You need to make sure that you've imported your trade history, that that's up to date. If you're an options trader, you need to make sure and adjust for expired options as well as exercised and assigned options. And it's also good to verify open positions with your last broker statement. That's a good way of making sure that that the trade history is up to date. Now, a tip with this is these steps are all covered in steps 1 through 4 of our 8-step quick start guide. So I'm going to open up TradeLog here. And when you run TradeLog, if you go to the Help menu, you can click on Getting Started Quickly, and it'll open up our 8-step guide. So steps 1 through 4, you can do those throughout the year. And if you've done those 4, you can be pretty sure that your trade history is pretty up to date and is accurate. So some detailed instructions can be found steps 1 through 4. Those are good to do now if you want to get TradeLog up to date. Now I've got a demonstration file here, and I want to show you a few key points. Number 1, I've already imported all of the trade history. You'll notice here I put the spotlight on the last date is December 1st. So that's the last date I can import up through is December 1st. I usually recommend importing and doing this maybe first thing. A lot of our very active users, this is something they do first thing in the morning before they start trading for the day, is they go ahead and import everything into TradeLog, make sure that everything's up to date as of the last day, and then you can run some of these reports we're going to talk about. Now, in this particular file, I do have some options, and so one of the things I'm going to do is I'm going to click on the Open Trades button, and this is going to pull up a list of the open positions. You'll see it lists a lot of positions that are open, and if I scroll down, I notice some of the options actually expired last month in November. So what I need to do is expire my options, and the easy way to do that, if I'm on the open positions view, is just go up and click on expire options, and I'll expire everything up to December 1st, and that's going to go ahead and expire anything that expired worthless as of December 1st. And so now I have a much smaller list and more accurate list of everything that's currently open. Now also, if you trade options, it's good to see if there's any adjustments that need to be made for exercised and assigned options. And the easiest way to do this is to go to the Edit menu and just click on Exercise Assigned Function. And so when we do that, it pulls up a list. Here I have some options last month that that need to be adjusted. So I can click on the Exercise button in the bottom right corner, and it asks if I want to automatically do these. I click yes. TradeLog's made the necessary adjustments, so I can now close and save the records. So now I have my trade history up to date. I have all of my options up to date, the adjustments as far as exercise assigned and expiring. And it doesn't really matter if you expire your options first or you do the exercise assigned, because the exercise assigned function is going to override and correct if you already expired the options. So that doesn't really matter too much. So it's also good to take a look at your open trades and view those. Like I could view my open trades as of November 30th and compare that with my broker statement just to make sure that everything matches up. If you haven't used TradeLog in a while, I recommend doing that. Some of you keep TradeLog up to date on a day-to-day basis, and that's something that's important. So if you've done that and you keep it up regularly, you probably know how your trade history looks. So that's some of the steps you may want to do. Now, if you have a multiple account file, I can switch over to another account. Here in this multiple account file, you want to make sure all of your TradeLog accounts are up to date. And you want to make sure that all of your trade history, that all of your accounts are in the same data file. Because when you run the wash sale reporting, we need to make sure and account for any wash sales across accounts. So what you want to do is go through each of your accounts and do the same steps, make sure and update everything. This particular file that I have, one of my accounts, it was closed, so it only has 1 month of trade activity, and then pretty much the other account I'm trading in. If you have an IRA account, then you want to go ahead and put your IRA accounts in here as well, because as we'll discuss in our next webinar about IRA wash sales, those can affect you as well. But let's take a look now at our gains and losses report, because this is really the step we're getting to. We've got our trade history up to date. Now what we can do is we can run our taxable reporting. The best report to run to understand your gains and losses is the actual gains and losses report. You'll notice in parentheses in the reports menu it says this can be used for state Schedule D. So this is not something you file with the IRS because it's not the proper format, but this is the best report to give you the information. So you want to make sure and you run this from the All Accounts tab if you have multiple accounts. I can click Run Report, and this is going to give me a report. You'll notice it is in draft mode because I haven't ended the tax year yet. That's okay. I just want to see where I stand year to date. Now, in this particular account that I have, I wanted to show you this account because of a few things. First of all, let me explain what we're looking at when we look at the gain and loss report. Here we list all of your taxable activity that's reported for capital gains and losses by short-term and long-term. In this file, I only have short-term. So we list all the trades, and you'll see all of the wash sale adjustments. Keep in mind that most of you are going to have wash sales throughout the year, and most of them you don't have to worry about. So you can see these. Now, something that a little detail I'll explain about the TradeLog wash sale reporting. When you're looking at the gain and loss report, you'll notice here, line number 3, I had an Apple put that closed at a loss, and right underneath that is a wash sale adjustment, and here you see in brackets the number 4. So that tells me that the wash sale, that this loss of $431 was now adjusted to line number 4 to this trade. So that's what the number in brackets is. So that kind of helps you understand where that loss was adjusted to. Now when I go down to line number 4, I'll see the result was a $2,500 loss. That was also a wash sale adjusted to line number 5. Line number 5 was adjusted to line 6 and 7. So you can see how wash sales can really snowball throughout the year, as it does in this particular account that I'm looking at. But now I want to show you the summary. Here at the bottom of the window, you see a summary bar, and this is a great little tool to help you get a quick snapshot of your taxable gain and loss. So I'm looking here at the summary bar, and this is the gray bar at the bottom. And actually I'm going to turn on my highlighter because I want to highlight for you. Notice here I have my actual gain and loss on the far right. So in this account, or in these accounts, I lost a total of $49,000. Actually, I didn't. I won't claim this. This is someone else's loss. $49,000 was the actual amount lost. Now, you'll notice we have a column for wash sales that are adjusted to IRA and other wash sale deferrals. So in this case, there's nothing lost to the IRA accounts. But you'll notice under wash sale deferrals, I have $5,411. And so this is, let me clear my screen here, and this is the amount of wash sales that are currently being deferred at year end because it's attached to open positions. Now, in this particular account, you may notice something. The taxable gain and loss is $84,000. So that's a lot more than what we see with the actual. If you do the math between the actual gain and loss, add in your wash sale deferrals, how do we get to $84,000? Well, the answer is this. If you've used TradeLog for multiple years, you know that TradeLog keeps track of your wash sales at the end of each year, the wash sale deferrals, and moves those over to the next year. So if I close out of this, and I'm going to show you, if I click on Enable Filter and I view just my W records, these are the wash sale deferrals from the previous tax year, from 2013, that were attached to positions in 2014. So I have, in this account, $40,000 in losses from wash sales that happened last year. And so that's what's driving my losses up so much higher. Even though in 2014 I only lost $49,000, I still have $40,000 in losses from last year that's attached to positions. And so that's driven up my losses to a total of $84,000 in taxable losses. So let's go back to the gain and loss report here, because I want you to understand something with this report. And here in this report, there we go. Should I be concerned about the $5,411 that are being deferred at year end? Well, as you can see, I already have a taxable loss of $84,000. So it doesn't hurt me that I'm deferring some of these losses to the next tax year. So in this particular case, understanding my gains and losses, how they're affecting me, is going to help me to know whether I need to be concerned about wash sale deferrals or not. In this case, I don't have a taxable gain. I have nothing to worry about. I've got plenty of losses to use up this year, so I don't need to be too paranoid about my wash sales. But let me switch over to another file here that I can use for a demonstration. And here, this is just one account, but when I run the gain and loss report on this particular file, you'll notice in the summary at the bottom of the window, I have short-term and I have long-term. Notice my short-term trades, I have an amount of $16,000 in wash sale deferrals. So you'll notice that my actual gain and loss was a total of $76,000. So I have $73,000 in gains for short-term. So I did good through the year. I was very profitable in my trading. But because I'm deferring $16,000 in losses, that's going to drive up my taxable gain to $88,000. So that means I'm going to be paying taxes on $88,000 of short-term capital gains, even though I only made $73,000. So in this particular case, I might be concerned about these $16,000 in wash sale deferrals, and I may want to try to capture some of those losses so that I don't defer them to the next tax year. So we're going to come back to this account in a moment, and we're going to look at this a little bit more and how I can control these wash sales and understand what they are. But one thing I also want to show while I'm here is the difference, why we look at the gain and loss report. You notice here in the gain and loss report we show all of these wash sale adjustments. And so this is a nice report if you really want to look at the details. If you want to go back and say, well, where was the wash sale on such and such? Well, you can see the wash sale adjustments. If you run the 8949, which you can run at any time during the year, you'll get a little pop-up telling you it hasn't been finalized, so the report's going to be in draft mode. We get several warnings to warn you of that, because we don't want you to file something incorrectly. But here we have the 8949, and you'll notice the numbers at the bottom are the same, but you'll notice the details are different. The Form 8949 doesn't give the level of detail you sometimes need to understand your wash sales. It simply puts, if I find here's a wash sale, column G, you see an amount listed, and then column F, it has a code W. So this is how a wash sale is reported on the 8949. It doesn't tell you where that loss went to or any details. So that's why when it comes to analysis of your trades and understanding your taxable gains and losses, we recommend looking at the gain and loss report in TradeLog, because that report's going to give you more detail and you're going to better understand what's going on. Okay, so let's go back to our presentation now for a moment. And I'm going to pause for just a moment here. Make sure, it looks like we're doing pretty well with some of the questions. Very good. So let's talk about our next point, which is using TradeLog to understand your current wash sale effects. So now that we've looked at the gain and loss report and we understand where we stand on our taxable gains and losses, now we want to look at the wash sales. Now, you remember the first file I showed you, for that particular trader, he had so many losses this year that it didn't hurt him to be deferring some to the next tax year, so he may not be too concerned. But the second file that I showed you was a trader who might be concerned about wash sales because the deferrals were going to increase taxable gains, and that's an area that can hurt. So there's a couple of tools that I want to show you in TradeLog that can help you understand what the wash sales are that are affecting you and what you can do about them. We're going to look at the wash sale details report, the potential wash sales report, and the open positions view. So now I'm going to switch back over to TradeLog, and we're going to stay in the same account where we had $16,000 in wash sale deferrals that could hurt us at year end. So the first thing I want to show you is the wash sale details report. I clicked on the All Trades button in the top left just to kind of reset everything, so I'm viewing my complete trade history. And again, if you have multiple accounts, you want to run your reporting from the All Accounts tab. That way you've accounted for any cross-account wash sale adjustments. Now under the Reports menu, under Tax Analysis, you'll see there's the Wash Sale Details report. So I'm going to run that report. Now I want to make sure you understand this report does not list every single wash sale that's occurred in the year. This report only lists wash sales that are affecting you at year end. So the wash sales that are basically affecting your taxable gains and losses. So we have a couple of sections on this report. First page is a summary page. You'll see it has, let me turn on my spotlight, we have a summary of wash sales, losses, deferrals. So we have what's attached to year-end open positions, and we have what's attached to January trades. So this section has nothing in it for January trades because we're not in January of next year yet. Check back at the end of this month. We have a webinar that's going to explain how to use this report in the month of January. For now, we want to focus on this section attached to year-end open positions. So these are the wash sales. These are the securities that have wash sales attached to them, and these positions are open. You'll notice there's our $16,412 that's affecting our taxable gain and loss. So here, if we want to understand more about these, it gives us just a summary here on the first page. We see the actual securities where these wash sales are attached to. But now I can scroll down to the next page, and you're going to see the details. So the detail section actually shows all of the trades for these securities that have wash sales attached at year end. So you'll notice we had something attached to trades, some options on BRKB, so we see that. We have some options on cost. Here's one I'll take as an example. FSLR is the ticker. And let me turn on my highlighter again because I know there's a lot to see on here. So notice here for FSLR, we're looking at this. You'll see that we have shares open, 600 shares open, and so the amount of the wash sale is made clear right above that. This was the wash sale adjustment that's attached to the shares that are currently open, the 600 shares open, and that's $7,683.78. That's the amount of the loss that I cannot claim until those 600 shares are actually closed. So this is where I get information. Now I can make decisions, and we'll talk about that more in a moment, on what I want to do. If I close out FSLR, if I close out those 600 shares now, then I'm able to capture those losses in the current tax year. Now, whether or not that'll be a profitable thing for me to do, that's what I have to balance. But this gives me the information. Now I know what shares are open that need to be closed out. Now, another report that is very similar, and I think is a little more helpful, is the potential wash sale report. So the wash sale detail report is going to provide the summary of what's attached to year-end open positions, and it's going to show you the details. So this can be helpful because you can tell real quick what securities you've lost the most on. Maybe I don't need to close out everything, but maybe there's a few positions that I need to go ahead and close out. Sometimes you may have options that have losses attached to them, and maybe those options expire in December. So once those expire or are closed out, no problem. In this case, I have options that expire in 2015, so I would actually have to do something if I want to try to capture those losses. But another great report that I want to show you is the potential wash sales report. You can find that in the reports menu under tax analysis, and you'll see potential wash sales. So this report doesn't give all the details that we saw in the other report, but it gives a nice summary. And section 1 is what we want to focus on right now, because this is wash sales attached to open positions. And that's what we're talking about. In December, we want to look at what positions do I have open that have losses attached. And if those losses are hurting me, I may need to close these out. What I like about this report, like I said, it's a better summary. It gives me the tickers, it gives me the number of shares or contracts, and then it tells me the amounts. Now, if you have multiple accounts, this also tells you what account these shares or contracts are in. So that way you have more information to know if you need to go and close those shares out, you know right where to go, what account you need to go to. So this is a nice report to give you that snapshot. If you want to see specific details, you can go run the wash sale detail report. So now I know what positions are open that have wash sales attached to them. Another tool I want to show you before we go back to my PowerPoint slide is the open positions view. And this is found up on the toolbar. You'll see the green button that says open trades. When we click on this, it shows us a list of open positions. Now this is all of the positions that I currently have open. We were just looking at reports that show which of these have wash sales attached to them. But this helps you kind of get an idea of all your positions that are open. And if you do know, for example, that you have some wash sales attached to, we're talking about those shares of stock, for example, FSLR is the ticker, I can double click on that, and it's actually going to go to the account, and it's going to show me where I bought and when I bought. So in this case, November 7th is when I opened 600 shares of FSLR. Those are the shares that have wash sales attached to them, about $7,000 we saw from our potential wash sale report. So that's something that I need to decide what I'm going to do with. So those are some tools that can help you. As I said, the potential wash sale report is the best one that I like to use to look at because it gives me a quick glance. Oops, this is why you want to make sure and hit all trades and then run the report. Here we go. So this shows me a quick glance of what I have open that has large amounts of wash sales. With that information, coupled with the understanding of where I stand, my taxable gains and losses, well, now we can go back to step number 3, and that is closing positions if necessary. So we have the information. Now we make decisions based on that information. Like I said earlier, don't think that just because you have large wash sales attached to open positions that you have to close those out. You need to balance that with an understanding of how those wash sales are affecting your taxable gains and losses. Now, if those wash sale deferrals are driving up your taxable gains, then that might hurt you. And so then you may need to go ahead and close out some positions. At the same time, you may have other factors that are involved. Closing out that position might result in an even greater loss, and it might be better to go ahead and continue to carry that wash sale on that position and close it out later. These are decisions you have to make as a trader. Sometimes you need professional help with that. Maybe you're really over your head. Maybe you've got some really bad wash sale situations, some really heavy losses, and you're just not sure what to do. Or let's say that you have so many wash sales. Your wash sale amount is so high that it's driving your taxable gains way up, even though you actually had a lot of losses. You might not want to close out everything. You might want to see what other strategies are available. And there are some strategies that you can sometimes get help with. And so if you need professional help looking at your situation and deciding what you should or should not do, I'll give you an example. Some of you may be active enough in your trading that you may qualify for Section 475 for trader status, mark-to-market accounting, and that might help you to help offset some of the losses that you had in this last year. But again, that's something that you have to look at all of your situation as a trader, and you may want to get professional consultation. We do have service providers who can help. I'll show you in a moment how you can find that information. So if you're looking for professional consultation, keep in mind if you contact us here at TradeLog, we can't provide tax or legal advice to you. We can provide some general guidance about how TradeLog works and about how the IRS wash sale rules work. But as far as telling you what you should or should not do, we really can't do that. But we have some professionals who can help. Here's something that's important to keep in mind. If you close out a position that's currently open in order to capture some of those losses, remember that if you open a new position within 30 days, that's going to just trigger another wash sale. I've seen this happen before where someone has said, I closed out the position to capture the loss, but why is it I still deferred these losses? Well, it's because they turned right around and bought more shares of the same stock, or they bought an option on that stock, some other qualified position. So if you're trying to capture losses by closing out positions in December, remember, you basically can't touch that security for 30 days or else you're going to trigger another wash sale. And that takes us into the fourth point. We talk about watching wash sales in December, and that is to avoid new wash sales if the new wash sale can be harmful. So if opening a new position could trigger a wash sale that has some harmful effect on your taxable gains and loss, then you want to avoid that. Now, let me show you a couple things. I'm going to go over to our website now. If I can find it, here we go. At our website at TradeLogSoftware.com, under Resources, you can click on IRS Wash Sale Rule. And this is going to take you to our guide to wash sales and the wash sale rule. And in this guide, we have a chart of wash sale triggers. And this is a really great little tool. If you click on that chart of wash sale triggers, it'll take you down the page, or you can scroll down until you find it. Here we actually tell you which trades can trigger a wash sale in TradeLog. So this is going to help you understand, say you just sold stock at a loss. Well, what kind of trades or new positions could trigger a wash sale in TradeLog's reporting? Well, notice here in the top left, buy stock, sell at a loss. If you buy more stock, it will trigger a wash sale. If you buy a call position, it will trigger a wash sale. But there are some other trades that will not trigger wash sales. So this can kind of help you make those decisions. If you know, wow, I just took a really hefty loss on such and such security, well, now you can refer to this chart if you're not sure what types of trades are going to trigger a wash sale. Keep in mind, if you're trying to avoid all wash sales, that might be futile. What you're worried about is wash sales that hurt your taxable gains and losses, wash sale deferrals that drive up your taxable gains at year end. So look at your gains and losses, know where you stand. If you just took a heavy loss on something, well, now you can decide whether or not you should stop trading that security, what types of trades you should avoid, or maybe it doesn't matter and you can just do whatever is best to be a profitable trader. So this is a great little tool on our website under the resources, and let me just go up to the top and show you. That's under resources, IRS wash sale rule, and then this is the page, and you want to go to chart of wash sale triggers. So you can find that that tool there. So another thing I want to show you is back in TradeLog Software. Remember we talked about the potential wash sale report. I'm going to close so I can show you how to get to that again. Say you've gotten everything taken care of. If you need to close out some open positions to capture losses, you go ahead and you do that. So you're watching everything carefully. The potential wash sale report can help you to avoid new wash sales. If I go to the reports menu and I click on potential wash sales, we already talked about section 1, wash sales attached to open positions. Section 2 is losses that may be disallowed by new trades. So for example, notice in this particular account, there are losses in the last 30 days for ticker FB, so we have Facebook and Twitter, those two stocks. So particularly look at the Twitter. Sorry, I should highlight this and help you out. Here we're looking at the Twitter. We had 800 shares that were closed on November 28th at a loss of $8,500. So that means if I open another qualified position on Twitter between now and December 28th, I may trigger a wash sale. I could defer up to $8,000 in losses if I do. So in this particular account that I'm looking at here, remember the wash sale deferrals are hurting the taxable gains. So I do not want more wash sales. So this would be a good thing for me to be aware of, because it might be best for me to just avoid that security until that window's passed. That way I can go ahead and capture that loss. If I make another trade on Twitter before that date of December 28th, then I'm going to have a wash sale that occurs, and those some of that loss may be deferred to the next tax year. So again, this is just information. It's not a rule. Doesn't mean don't trade this. You need to make those decisions based on the big picture. What's your taxable gain and loss looking like? How are wash sales affecting your gains and losses? And how could new wash sales potentially affect those? So be aware of this information. And here we explain kind of how to use this report, and we also have a link for additional information. This will take you to our user guide, and it will actually explain more about the sections of this report. So that's what those blue links on the report do. Section 3 of the potential wash sale report deals with IRA wash sales. I'm not going to get into that because we have another webinar, an entire webinar dedicated to wash sales and IRA accounts, and we will be discussing that in that webinar. But that's a tool to use when we talk about avoiding new wash sales that could be harmful. Okay, so let me go back to our presentation here, and we can go to our last page. We're kind of wrapping it up, and I think we've been answering some of your questions offline, and we're going to look at any other questions we can address here when we get done. Some key takeaways. What you need to watch in December. First of all, know where you stand with your taxable gains and losses. You can do that with TradeLog by updating your accounts, update your TradeLog file, make sure everything's up to date, and then you can run the gain and loss report and see where you stand, what your taxable gain and loss is going to look like, and then you'll know whether wash sales are hurting you or they could even be helping you, or it just might not matter. So understand where you are with your taxable gains and losses. If the wash sales are affecting you in a bad way, then you need to understand what those effects are. The potential wash sale report and the wash sale detail report in TradeLog can help you understand which securities are affecting you that have wash sales attached. And that's point number 3. You may need to close out some of those positions in order to capture the losses. Remember, if it's open and the wash sales attached to the open position, you cannot take the loss until you close out of that position. But of course, keep in mind the 4th point. When you do close out a position at a loss, if you open another qualified position within 30 days, then that can trigger another wash sale. So if wash sales are hurting your taxable gains and losses here at the end of the year, then you'll want to avoid new wash sales that could potentially hurt you more. So be aware of those things, and that's why in December we watch our wash sales, because we need to understand what's going on and make sure to take necessary action, informed action. Because the point at the bottom, remember, not all wash sales are bad. So if you've been told that wash sales are always bad and avoid all wash sales, then you're probably getting paranoid. Wash sales are going to happen throughout the year. What's important is to understand how wash sales affect you and make educated decisions at the right time. And December is definitely a time to start looking at wash sales and make decisions accordingly. The rest of the year, we usually tell you to just focus on being a profitable trader. December is when you want to start looking at the tax results, because once the month is over, there's not much you can do. If the position was held open at the end of the year, you're not going to be able to close it in January and make those losses retroactive. So that's some information to think about. So resources available for traders. Going to show you a few things on our website at TradeLogSoftware.com, and then we'll answer some of your questions. So if you go to our website at TradeLogSoftware.com, the resources, if you click on resources, we have tax resources for active traders. You can either go to the main page, or we do have a drop-down menu. But here we have our definitive guide to the IRS wash sale rule. So this is where you can find a lot of information about wash sales, how they work, all the little details. That chart I mentioned, you can find all of that here. You can also find articles in our blog about wash sales, particularly if you go to the section on trader taxes, which is located here on the right side. We have some of the articles that we've posted about wash sales and trader taxes. I also want to show you, while I'm here at our website, if you're looking for the archive of our webinars, you want to watch some of our past webinars. For example, just the other week, we had a tremendous webinar on Wash Sales 101. We'll go to the support menu, and there you'll see an option for webinars. You can just click on that, or you can go straight to the archive. Here we show upcoming webinar sessions, and then at the bottom we have a list of all of the archived webinars. So you can click on the webinar you want to watch. As I mentioned, here's Wash Sales 101 for active traders. So if you missed it, you can check that out. We had a really great turnout for that event, and so that has some good basic information about wash sales. Also, I mentioned earlier about professional help if you need to consult with the CPA about trader taxes, for example. Under our support menu, we have accounting service providers. And here you can see our approved service providers. Green NFH particularly is a full-service CPA firm that can consult with you about your wash sale situation, about making the switch to mark-to-market if you're thinking of doing that. So this is an excellent place to go if you're looking for professional help. And of course, too, if you do have questions, you can contact us, or under the support, if you're a TradeLog user, you can use the online support request and request more assistance from us there. So now I want to talk for a minute about some of the questions that we have. Give me just one moment. Okay, so let's see. Let's see here. Give me just one second while we, there we go. Now I've seen some of the questions. Okay, so again, one of the questions that we had asked a couple times, and I'll just recap on that, is with mark-to-market. If you've elected Section 475 and you have trader status, mark-to-market accounting, then wash sales don't apply to you. Now, when we say trader status, that means you've actually made the election. It doesn't mean you call yourself a trader. There are many, many, many traders that do not have trader status and don't qualify. So if you've qualified and you've made the election, then wash sales do not apply to you. Until you've made that election, they do apply and they can affect you. So that's something to be aware of. Let me look at another question. Also with that, we talked about that earlier, Section 1256 contracts. If you trade futures, broad-based index options, as well as some ETF options, then the wash sale rule does not apply to those. You can go to our website and you can learn more about Section 1256 contracts under our resources, and we explain how those are reported, which is a little bit different. So one of the questions we were talking earlier, we were looking at the example of a potential wash sale on Twitter, and it said in the wash sale report that if I made another trade before December 28th, that was my 30-day window, that it could trigger a wash sale. So if, let's say I bought more shares of Twitter, let me just go back over there. It's a little bit easier to see this in front of us. Potential wash sale report. So here you'll notice it shows for Twitter 800 shares, 8,500. So let's say I buy 800 shares of Twitter tomorrow. Well, that's going to trigger a full wash sale, this full amount of $8,500. So now I'll be deferring $8,500 on Twitter to the next year. But if I close that position before the end of the year, then I can still capture that loss as long as I don't reopen it next year. So it is possible to trade on Twitter still in December, but I may have to make sure and close that out by the end of the year if I don't want to defer that loss to the next tax year. And then, as I mentioned, we're going to have a webinar later this month. We're going to talk about January, the month of January, what you need to be aware of in January. So there is the possibility that trades in January can also trigger a wash sale. So that's a question. Okay, another question that we have here. Give me 1 second. Okay, and so Susan asked a good question, and this is a strategy a lot of day traders follow. Susan asked if all positions are closed at the end of the day and I don't trade the last 30 days of the year, do I care about wash sales? Well, you shouldn't have any wash sale deferrals because you've closed out everything and you haven't traded it for 30 days. And so that's the 30-day forward window. Everything's closed out. You should have no wash sales. So when you run the wash sale detail report, it should pop up and say, good news, you have no wash sale deferrals. So that is a strategy that a lot of day traders follow. A lot of other traders follow it as well, of just not trading for 30 days or not trading during the month of December. And if that works for you, that's fine. That's a way to make sure that you don't defer any losses to the next tax year. On the other hand, a lot of traders want to, they want to keep trading during December. There's opportunities to make some profitable trades. And so with the strategies we talked about today, you can do that, but you just need to understand wash sales and watch how they're affecting you. Okay, let's see if we have some other good questions here. I think we're actually coming up to the end of our time. Yep, okay, very good. So I think we answered most of the questions. There's a few others we might be wrapping up. One of our support reps is with us today helping with that. So if you have additional questions, feel free to contact us directly. You can email us at support@tradelogsoftware.com or just go to our website at tradelogsoftware.com, and in the top right you can click on Contact Us. As I mentioned, we recorded the session today. Everyone who registered will receive a link as soon as it's available online, and you can watch the session again. There's some things that you might have missed or that you might want to go over again. And also keep an eye out on your email because we'll have some upcoming blog articles very soon that will recap some of the strategies we discussed today as well. And so for some of you, you might find that more helpful to have something, a reference that you can read. So again, thank you for joining us. We look forward to having you on our next webinars, and I think we'll check our webinars page. Our next webinar is on December 18th, IRA wash sales and the painful results. So we're going to talk about wash sales in an IRA and how those are always bad, but also some strategies that you can do to avoid the harsh consequences. So we hope you can join us for that webinar. Thanks again, and have a great night.